All right, well, welcome everybody. This is I was inspired to do this presentation because we had our first six-figure month this past year, and since then we actually hit it a couple of times. So wanted to just show everybody what we were doing to help the community and help uncover these nuggets of gold that many investors and agents simply pass up on because they don't recognize the nugget of gold for what it is. So hopefully everybody here will be able to have opportunities to partner together and really uncover and recognize deals that each other could benefit from or partner with, and give you guys an opportunity to do more of those deals. So, Panning for Real Estate Gold, 7 strategies to achieve your first 100K a month is what we're offering today, and lunch is sponsored by Jose Medrano, as we mentioned. But let's go ahead and go to the next slide, and I'll give you a little bit of an overview and some of the members of Neartown Properties and indirect members. Some people are investors, some people are subject to investors, rehabbers. We have agents and wholesalers. So we have a variety of partners that are involved in real estate, but most everybody doesn't do what everybody else does. If you talk to one real estate investor or agent, they have a niche that they focus in on. And not everybody has all these different strategies. And so the idea is, I want to show you how to recognize these different strategies. But here's a short list of some of our favorite partners that we work with. Amanda, Luke, Michael Boyd, Steve Coggins. A lot of people couldn't be here due to the holidays, but a good group of investors here. Camille Davis, one of our superstar investors that we really appreciate. Derek Merle, Chad Crabtree, Tim Green, John Dohill. Marissa, my wonderful wife, myself, and our wonderful fearless leader, Miss Emily Lopez, broker.
Hello. I'm the one that started it all.
Yeah. You take all the liability, don't you?
No. It's shared 50-50.
Yeah. So, we started our business back in 2006, and Emily had been in real estate for some time, as well as my wife, Marissa. And I myself have come from the financial services industry, being a mortgage broker person back in while I was still in college, and recognizing that lending environment was not as easy and friendly as it used to be. When people would do the ninja loans, the no income, no job, all right, come on. If you could fog a mirror, everybody knows you could get a loan. And in many ways, sometimes it still is like that, but it's tightening up, as we all know, so to speak. So some of the strategies that we focus on are really meant to help people transition their businesses so that they don't have to rely on bank lending if bank lending gets tight again. So 2/3 of our business today comes from cash and owner finance transactions. So if the market slows down or anything happens with bank lending environment, we're hedged. So that's part of the idea with the progression of my background and where I come from in financial services. So let's go ahead and move forward to the next slide and show you some of the things. Now, we're going to talk about some of today's agenda and talk about some of the struggles of growing and learning, because it's a learning process for everybody. But everybody knows it's not always easy, and I don't want to make people believe that in 90 days everybody here is going to make 100K, because it's really, it's up to the people that are going to go ahead and put forth the effort and the energy to make it happen. But so building your real estate empire, again, converting more deals. Going to talk about 5 different ways that focus just on owner financing and subject to. We're going to talk about how to buy properties, fixer-uppers, and rentals for those that are more rehabbers and wholesalers. Also discuss ways to use private money and hard money in these different kinds of transactions, and how to buy pretty homes and luxury homes, different niches that you can market to. So, all right, so the question is, why learn more strategies? Many people have core competencies and they just focus on those strategies. And well, the idea is, when you get started in real estate, and this can be different for everybody, this is a blanket generalization and not necessarily true for everybody, but when the average real estate person gets started, or the average investor gets started, you have to talk to about 20 to 25 leads before you really find somebody that you can work with. That when you get started, it takes a lot more time, energy, and effort to convert somebody and learn how to help somebody. It takes a while to learn how to understand somebody's needs. And as you get better at understanding how to help people, the idea is you can start to convert more of the prospects and the leads that come at you. So I've built our practice to be, I'm more of what's considered a generalist. I know about 7 different strategies or 10 different strategies, and I can adapt to the situation to help convert and help somebody. So I'm going to talk about some of those different ways that we've used. And today, I convert probably between 20 to 50% of the leads that I actually commit to working with. So whenever I commit to working with somebody, I have a really high close ratio. One, because my wife and I are both voted most friendly in our high school classes, so we're genuinely helpful to people and friendly to folks. And it's a unique combination that allows us to have more success. And Marissa's ability, believe it or not, we all have our specialties that we do. I help handle a lot of the acquisitions and sales up front, while my wife helps handle the relationship management part of the process and a lot of the administrative process. But we call her the deal whisperer, because she makes people come together whenever we didn't think there was a way that they were going to be able to come together. So it's important to recognize your strengths and your weaknesses as you're going through this process, because a large part of today is geared towards acquiring properties. I'm not going to really talk too much about how to sell the properties as much, or what it takes to sell the properties. This is just to help you get your foot in the door to start to do some of these deals. But that being said, these are some of the varieties of deals, which we showed in the other slide. But the idea is a large part of our business is retail listings, so representing sellers as an agent. So for those of you that are agents, we have a small part of our business. Really about 10 to 20% of these different strategies make up our business. So buyer leads. So buyer leads, there's a lot of variety of different buyer leads that you can work with. Investors, retail buyers. Our favorite niche is actually owner finance buyers. And I'll talk about that in a little bit in the next slides. But the idea is there's a lot of scarcity, and I'll talk about that. Wholesale deals, that's going to be properties that are often going to be expiring from a lot of real estate agents. A lot of real estate agents simply aren't the best fit sometimes to help with wholesale deals, although there are plenty that do focus on them. The idea, though, is that many agents don't necessarily know how to set the price, adjust for repairs, and adjust for the necessary fees and expenses to cater to investors when they have an ugly property that's going to sit on the market forever. So wholesalers play an important role in those ugly properties. But wholesale deals, owner finance assignments, there's several different kinds of owner finance transactions, and I'll go more in depth. But when you owner finance, there's owner-to-owner financing where nobody stays in the middle. All of the remaining note and equity payments continue to the stream as a cash flow to the original owner. And so when we talk about mortgage assignments, that's what we're talking about in that process. Whereas when you're a subject to investor, you're actually looking for people that have the right motivations and looking for the right scenarios so that you can recognize when people are so in a pinch, in a bind, where they may have little no equity, where they try to sell a property and they literally can't because they're underwater when it comes to the closing table. So we provide the solution for a lot of these people, whether we defer a portion of the arrears in the payments, or whether we go ahead and help actually expunge and remove an entire mortgage. Sometimes there's different things that we can do. For instance, on 80-20 loans, a lot of people can negotiate the 20% of the initial loan or the first loan rather than the second. Anyways, there's a variety of deals and scenarios that we can cover. The other one, though, is can't see this too well here, but referrals. I call it double dips and growing the joint venture business. So you're going to be more abundant if you learn how to partner with people, and that's part of the idea today, is to learn how to partner and recognizing your strengths, but not passing up those opportunities to make additional streams of revenue from the people that you encounter on a day-to-day basis. So why owner finance? The number one reason that I came up with owner financing is scarcity. And I just wanted to make this point here that, and this is what I pulled up actually yesterday because, you know, we plan these things way in advance. But you can't tell, but this is actually the number of leads that range from 140,000 and up on the MLS. There's presently about 17,000 or 18,000 homes in and around just on the HAR MLS that are 140,000 or more. Whenever you look at owner finance, there's a lot of dots here. It's about 200. But that's what we're looking at in terms of the scarcity of owner finance opportunities on the MLS market right now. And the challenge that everybody is having, or not everybody, but a large portion of the buyer's market, is that you can't get financing these days. So there's a huge opportunity to service the people that can't get financing. Lots of people still have good jobs, good income, but for whatever reason don't have the credit, or maybe just moved out of state, can't get credit because they just moved into Texas. A lot of people moving from demographics of California, Chicago, New York, where prices are just absurd. And cost of living is just a lot better here in Texas. So great opportunity to service this part of the market. And one of the ways that we like to sell these properties is with these signs. And of course, we place them during the weekends, and that allows you to not break the law, because I don't encourage people to break the law, but definitely advertise your properties. And of course, you're supposed to pick those up before the weekend is over. Signsonthecheap.com, if you want to know who we use for our signs. Wanted to give you some nuggets to use some of those. But go ahead and...
we know what it said. We know what
yeah.
it said.
So I wanted to just point out, though, the number of properties that are available in the $1 million range plus, 22 homes. In the $600,000 to $1 million range, 22 homes, which I guess last month or a couple months ago we sold the property. So we made up 5% of the luxury market back just a couple months ago. 400 to 600,000, 22 homes, 300 to 433. So when you're talking in the mainstream subject to owner financing, like Camille or Luke Moses over here, there's only 33 homes available in the 300 to 400 range. In the 140 to 300, about 100 homes that are going to be available. So what you notice here is that there's an amazing amount of scarcity in the market for owner financing. And I like that whenever I'm selling something. Scarcity is a good thing whenever you have so much demand. So move on over to the next slide. All right, so my favorite owner finance strategies. I kind of wanted to just give you guys a quick mix of the properties or the strategies. And number one, for agents that are helping people and working with properties, matching buyers and matching them up on the MLS is a business all of its own. It's one of the things that I used in my business to generate paychecks in as little as 7 days to 2 to 3 weeks. And in the business of real estate, when you're focused on bank lending or deals and doing deals, part of the whole thing is to shorten your sales process to where you can get paid and really to where you can help somebody. Because that's where you're going to get your paychecks. So that's been a regular strategy that we used when we needed to conjure up some money to pay the bills. And I hope that that's something that you guys can learn to do if that's something that you work with buyers. So mortgage assignments, and by the way, that's a great way to partner with other investors as you're getting started. A lot of investors with owner finance, typically I find ask between 10 to 15% down, but because of the amazing amount of marketing that we do, we're typically able to find buyers that put forth 20% down. And because of the owner finance scarcity, there's a premium that you can charge that's oftentimes between 5 to as high as 10% premium to the fair market. So by simply allowing this strategy to work, you earn your fee basically, and a partnership, ideally. Partners that we've worked with, Camille, I don't know, how many deals have we done together, Camille?
Oh, that's a good question.
We're pushing like 8, 9, 10 deals?
Yeah, I was going to say maybe 10.
10? Some,
Maybe,
so
well, probably.
Yeah.
In the ballpark,
yeah. we've helped Camille get hundreds of thousands of dollars of down payment. That was over the course of about a year. So it's a very good strategy, and we're happy and thankful for her partnership and others like her. Also, Ms. Marilyn Pinto, thank you. We've had some good partnerships on with you as well. But the third strategy here is buying subject to. So again, stopping foreclosure, helping sellers that are inherited properties, finding people that are really in the situation where they may be losing the house, losing the property. And there's an opportunity to help a lot of those sellers, and rather than have them lose everything at the courthouse steps, we're stepping in and we're helping those sellers find solutions to help them stop the foreclosure, help them prevent them from losing all of the equity that they may have had in the property. So the amount of wealth that we create with this is amazing. And the amount of savings that we help people with is truly amazing. And I'm just so happy we learned this process, because that's what we're here for, is to help others. So buying with a private lender and a wraparound mortgage, Wealth Club does a great job with that, and Tom Berry. I call it Tom Berry money. But with the private lender, there are ways that you can buy wholesale deals, put them back on the market, sell them owner finance, and because they're owner finance, they're scarce, and because of that, they can sell at a premium. Because of that, you can also not put in all of the granite, not put in all of the high-end upgrades, therefore saving you on rehab costs, and turn these properties into properties that you get paid up front when you buy the property even. And I'm going to talk about how I get paid even when I buy properties. I'm going to talk about how we get paid when we sell the property, and talk about how we get paid on the monthly cash flow. So those are going to be 3 different ways that we continue to get paid on these deals. But you can also buy with a conventional loan and then wrap the mortgage. That's what the average consumer does. And there are due on sale clauses that everybody needs to be aware of. But I'm not a tax advisor. I'm not a legal advisor, an attorney. So any specific legal advice, tax advice, check with your attorney. But the idea is we help do these processes with title companies, with attorneys, and everything's above board here. So go to the next slide there. So what I've done is I've prepared basically a progression of a lot of the deals that we've done, and how we've reached those kinds of opportunities and how we've found them. But in order to find deals, you got to start with some basic marketing methods. So everybody here, I'm sure, does different kinds of marketing methods. But by a show of hands, I first wanted to ask a couple of questions. How many realtors do we have in the room? How many agents? 1, 2. Okay, so it's a good mix of people here. How many investors or wholesalers do we have in the room? And you can raise your hand again. It looks like there's a good combination there. How many specifically only subject to investors do we have? Do we have anybody that focuses just on subject to?
Wholesaling and subject.
Wholesale and subject to, okay.
That's my main thing, but of course I rehab and do some other stuff too. So,
Yeah. So that's my point. Everybody has a niche that they focus in, and I'm going to hopefully show you guys some ways to recognize some additional opportunities. But a couple of quick marketing methods, and these aren't all of the tricks of the trade, because I got to keep some tricks up my sleeve. But direct marketing. This is just a direct postcard that we use, and direct marketing and direct mail works. It can take a while to work. I think Luke has an amazing story of how long it may have started to take.
A long time.
How many postcards did you send when you started?
I guess depending on how far back we're going, that's several different iterations, but I've sent thousands, like 5,000 or 6,000, and got 2 or 3 phone calls.
Yeah.
So depends on your mail piece and who you send it to.
Exactly. So
Before people started calling you, what?
What's that?
Before people started calling you? 5,000 to 6,000?
Well, I guess it was a mail piece was bad, I'm not sure. But
Yeah.
basically, in the beginning, when you're trying to figure out what the heck you're doing, send 5,000 or 6,000, you get 1 or 2 phone calls, you kind of throw up your hands and say, we're doing something wrong here. So now I send that and get more phone calls, of course, but it's taking a while.
Would you think that it's the mail piece or the list that you're sending to?
I still send to that list, I have better results now, so it's probably the mail piece.
yeah.
How many times do you send to the same Pegasus?
Now I'm on the spot. Now I send basically about 8 times.
Yeah, statistically, you can touch 6 to 8 times. A third of the business is on the follow-up. So if you can follow up, a third or even more of the business is going to be in the follow-up. And I'm guilty of not showing that.
I'm privileged enough to be able to help folks like you guys, because you guys help me get your business. And so I've got a lot of real estate investors, and so I've got a chance to get the marketing skills. And I'm telling you, those postcards work. It's going to take a year, but you start getting 1 or 2%, and drop $1,000 or $2,000 in investment in marketing. It's going to come back. I mean, say, look, what's your rate of return? And that's the way I kind of look at it as well. And I'm not going to try to BS you guys about marketing. So I sponsor this thing, and other things, and then I'm getting my rate of return. And so is it worth my while? But do I go to them and help them? Yes. So there's a lot. I actually got quite a few investors like him and like yourselves, and so I get a chance to really hear them how they do things. You're gonna have to touch people 3 times. Postcard, phone call, personal thing, whatever. Just hire somebody to the phone and call them directly. And there's some people that are out there, and you don't want to take advantage of their needs because they're desperate for the taxes or whatever. But it is an opportunity for business. It's just a cycle. It's just the way it works. And he's absolutely right. We're just talking about percentages.
Yeah. So marketing is huge, and I suggest doing a combination of postcards, a combination of letters, and a combination of representing somebody as an agent. If you have the opportunity to be both an investor and an agent, some people will respond to agents, some people will respond to cash buyers. So, and it's just the nature of the business because a lot of people don't want to pay a commission. So it's just funny how it works. But this postcard returned 3,400%. I spent about $1,000, got back $34,000 within 45, 60 days. Actually, 35 days had the first $18,000 on that transaction, and within 60 days we had the full $34,000. Now, the great thing about working with sellers or buyers is that 30 to 40% of sellers are still also going to be buyers because they're upsizing or downsizing or relocating. So if you're not tapping and double dipping, as I call it, by helping somebody both buy and sell, you're passing up and missing some business. And for wholesalers that don't necessarily work with buyers, make sure you partner with an agent and set up your proper marketing fee structure that you might set up. But that's a great opportunity because 30 to 40% of the leads that you're getting, you should be able to convert a good portion of those buyers, sellers to buyers as well. So GoBigPrinting.com is who we use for these marketing pieces. They got a good variety of pieces there that you can use. Real Acquisitions and US Lead Source are some of the places that we use to find these lists. Foreclose Houston. There's a variety of places that you can use. Driving for Dollars, door knocking. That's going to be very inexpensive, and referrals and partners. Again, really great marketing avenues that you can use. Next slide. So we mentioned the importance of lists and niches. Different people market and cater to different niches. I just wanted to give you a couple of examples of niches that are really highly motivated to sell in the first year. And that's going to be probates. That's going to be the highest statistic, probably second to expired listings. I don't even know what the statistic is on those folks that are going to sell, but probates, 80% of inherited properties will sell within the first year. So if you can get a good probate list, whether it be at the county court steps or through Real Acquisitions, US Lead Source, you're going to find tremendously motivated sellers, and I'm going to talk a little bit about the difference of approaching those sellers as an agent versus approaching those sellers as a cash buyer, or what we all know as a wholesaler, where you always use other people's money anyways to do the transactions. But 80% of those will sell within the first year. Divorces, about 61% of them will sell within the first year or so. So these are good niches for you to use and find and utilize for your marketing. Next slide. And as you can see, that was just a yellow letter or a postcard.
Yeah. I mean, I don't want to deviate from where you're going with this, but I mean, you touched on them like Real Acquisitions. Can you just elaborate a little bit on that? Where you think, the value lies in that, and maybe their success rate with real acquisitions?
Yeah, well, I mean, everybody needs to have a mailing resource or a source of leads that you can mail. What Real Acquisitions does and US Lead Source does is it gives you the name of the owner, it gives you the niches. You can actually break down with Real Acquisitions, and they have over 70,000 leads in the system in the Houston, Harris County area. Montgomery County, you can use any county that you want. So you can focus on a zip code, you can focus in on foreclosures in and around your neighborhood so you don't have to drive so far. So you can really isolate and pinpoint the leads that you're going after. If you want to go after luxury homes, you go get all the luxury listing addresses that you want. If you want to go after, very liquid rehabbed homes that are deep in equity, absentee owners, or people that are out of state that also have a trust, you can get really niche with what your lists are. Real Acquisitions also allows you to go ahead and filter by stages of foreclosure and pre-foreclosure. You don't necessarily want people that just filed suit, where they can still take 2 to 3 years before they reach the foreclosure steps. You want to reach people that are, what is it called? Not suit filed, but judgment has been served. Okay, those people are on the chopping block. So you want to be able to filter towards the motivated people. That's something that you can do with that. You can also filter by expired MLS listings that were listed 70% below ARV. There's just a myriad of things that you can really filter and create a really highly specialized niche of multifamily, single-family sellers.
So, I mean, you would just say that it's a quality product.
It's just very, it is. And there's different places that you can use, but yeah, Real Acquisitions, the first 2 expired listings that I got that we converted were from Real Acquisitions mailers.
Does that one also, can you pay a membership and you can go through all the different data, right? You don't have to buy specific lists.
Monthly payment.
It's
Yeah.
just a monthly fee.
Little expensive, but I prefer the upfront. I think it's $1,300 upfront, and you'll get it for a year. So yeah, the lists do cost money. A good list should cost you $300, $400 just to do 1,000 or so leads. But everybody's got different list source and ways of generating these lists. But we'll go to the next here slide. All right, so case studies. Now we're going to get into the good part of the presentation that I really like, because it's shocking how some sellers can't sell their properties and they have the perception that they don't ever want to pay a commission. So, I put my investor hat on and we buy houses cash. But this was a case study, and it was considered a wholesale or a hotel deal. This is a variety of deal that I'll go after. Again, similar to working with buyers, how do you generate fast paychecks? Wholesale is a very good way to generate fast paydays, because oftentimes you can do those transactions cash. So what I look for is for properties that would be good buy and hold properties, whether they be on Craigslist, Zillow, MLS, or a variety of places, but preferably direct to sellers. That's where you want to be. And in this scenario, this was a landlord and happened to also be a broker. So again, what are you going to do for a broker? Why are you going to help the broker sell their property if they're already an agent? Well, this person couldn't sell their property for over, I'd say, about 8 months, 9 months. And so he was tired, he was motivated, and he was ready. And so about 30-day turnaround time, this property, I knew that with a clean property like this, there were plenty of landlords out there that would pay the $115 or the $120. I bought it at $103. He wouldn't budge off of that price because he had granite in the property, brand new fresh paint, and it was worth $115 all day. But I needed to sell it fast, and so I also needed to get a quick paycheck, because we all need to pay the overhead. So I locked up this deal with one phone call, one appointment, and I went to the property just one other time and sold it with a buyer's agent, and we made about paid the buyer's agent their portion, and I think we made about $3,700 on this transaction. So again, you can help a lot of people, and believe it or not, real estate agents are one of my favorite folks to sell with and buy from. So go to the next case study there. Similar property, but in Galveston. Also off of somebody that I had spoken with off of Craigslist or Zillow, I don't even know where. But this was a lead that came back to me after talking to the seller 3 to 6 months prior. And I just do a follow-up text, and texting, by the way, will increase your conversion ratio upwards of 500%. So if you keep in communication via text, I send a picture of myself that's really cheesy oftentimes, because I'm sure nobody else is doing that. But it makes me memorable. That's the main thing. And if you're smiling and friendly, you're gonna be first in somebody's mind. So a property that we bought and sold, I think it took about, this one took a little while because it was a 3-1, little bit of a troubled area. But that being said, great property, and we bought and sold it. I think we bought it for 89, sold it for 95. So small fee, but that small fee paid for our little vacations down to Galveston and swimming around and hanging out. So that was a fun one.
Which CRM do you use to for your, I don't know, drip campaigns and reminders and?
I use FreedomSoft, and it's just a turnkey package that allows us to do a lot of what we need. But there's a lot of other good ones. Zoho and Podio are other ones that are mentionable. But this was another wholesale deal, and I want to show you not only deals that you can repeat and do, but create repeat partners. So this is a property that we did in our own neighborhood where we purchased. I was on Craigslist and I found a deal. I said, that's a deal. That's a tear down. I made one phone call, and I made actually a second phone call to a builder that I knew was active in my neighborhood that we wanted to build with and build a relationship with. So with 2 phone calls, I got this deal done. And now we've got about 3 properties or so, or 4 properties with this builder. And this is a multi-million-dollar relationship where we've got just from 1 phone call, and 2 phone calls really, and now we're working in our neighborhood. And now we've actually, it's funny, I was driving all over the place. I mentioned the previous slide, we went to Galveston. We've done some deals in Willis and Conroe and Katy and Crosby, so we drive all over the place. And I told my wife, I want to work closer to home. So I did 7 deals in our neighborhood. So this was one of the deals, and even better, go to the next slide, Marissa.
That was the before.
This is the before. Now this is the double dip. This is the sell side. We got exclusivity to sell the property on the back end. So now it's a $500,000 property in our neighborhood, and that's a way to double dip. And we've got 5 or 6 properties that I'm sure we're going to continue to do over the next year with this builder. So the scenario on this deal for this builder using hard money, lot value we bought for about $113, sold for $116.5. So it's just a small little nugget, right? But now we got a couple $1 million worth of real estate that we've penetrated and working with on this builder. But for the builder's sake, we're putting about $150,000 in his pocket. So knowing how to price it, knowing how to analyze the transaction, hey Georgie, and that's going to help you out. So the scenario was on this deal, he was into the property for $116 on the purchase of the land, about $200 to $234 on holding costs and construction costs, because it's about $100 a square foot to build new construction, about 2,200, 2,300 square foot home, and that's going to leave $150,000 profit at the end of the day after paying fees and agents and things. So, sweet deal. I really like these kinds of transactions. Next one. Again, tired landlord. This is more of a buy and hold, but a true wholesale deal, whereas the other one was more of a hotel deal because the properties were perfect. When you have a landlord property and it's the properties are occupied, the issue is for most sellers is that they're trying to get full fair market value while the property's occupied. Well, if the property's occupied, you're going to narrow your pool of buyers to just investors because investors don't want to occupy the property. Well, the highest end user is an owner occupant, so there's a real niche and a need to help buy and sell these properties wholesale, typically at about a 15 to 20% discount to the fair market. And this is a package deal that we did at really one of the first couple of months when I got started, and I was very thankful for this deal because you're getting started. You're in sink or swim mode, and I was treading water, getting past this stage of our career when we were first starting. But I did a package deal through a relationship, having been in financial services for 10 years, raising over $300 million in assets to manage for clients, and working with different offices that manage and custody billions of dollars. One of the clients knew that I was also an investor in real estate, and as I was on my way out, he actually called me one day after I was already quitting my day job, which I did 30 days after learning the wholesale, after watching Sean Terry's Flip to Freedom. I quit my day job 30 days after watching that video, and I said, I'm not going back. And this was one of the deals that came from the first couple of months. And we made maybe about just 15 grand on this deal. So not a big spread, nothing big fancy, but when you're starting out, whew, tell you what, it felt good. So go to the next one there. Okay, so that kind of covered some of the wholesale deals. I'm trying to just show y'all some of the wholesale deals that we've done. And now I want to show you guys and transition more towards expired listings and luxury retail listings that wholesalers may be passing up. Even agents sometimes don't feel the confidence to cater to the market because they've never done a deal that big, or they don't know how to foster the marketing or get the right deals or talk to the sellers or things like that. But this is a great property. We actually sold this property 3 times, got it under contract 3 times during the 60-day period during our contract. And on day 59, I said, you know, I was just confident the whole way through. And there's so many deals that if you just continue to follow through, you'll close on the deals. But day 59 got a direct buyer, paid all cash, funded this $475 all cash. And we paid the seller their full asking. They wanted to have, I believe it was, I don't even, whatever the numbers were, it was 4% less, 452, I think. So that one was a really good one. It was a direct buyer, Woodlands. Oil and gas right now, as y'all know, is hurting. Tons of expired inventory sitting up there. Tons of opportunity to also convert some of those sellers into owner finance or mortgage assignment deals, because you can pass the stream of cash flow to them and pay them a large down payment. But this was a cash transaction. So again, many people are afraid of those big luxury listings because they feel like they might sit a while. I do just as many cash transactions in the luxury market as I do in the wholesale market. So it's easy, it's fast. Buyers close in 2 weeks once we got them. Next. Another hotel deal, expired listing, motivated sellers. You know, you're looking for that motivation. I really like working with expired listings, especially in the higher end, nicer homes. And again, the situation here is ex had, I believe, been widowed and remarried, and now they had a whole separate house, and they were gone. They were no longer in this house. It's been vacant for a year. Had been sitting and trying to sell for over 9 months to a year. And we bought it for $167, sold for $185 for a profit of 18, paid my partner approximately 3%, paid a buyer's agent 3%, and then I paid myself. Now I love it when I have properties like this that I never meet the seller and I never meet the buyer, and I've got 20 minutes of involvement and I make $6 grand. My favorite kinds of deals. So I love partnering with people because we can add so much more value to them. And this seller had been trying to sell at a lower price for so long and they got nowhere. So we can come in and add so much more value because of the amount of marketing that we do. And right now we're getting upwards of 100,000 people to see our inventory on a weekly basis. Just what I'm gathering from the different marketing venues that we use. But typically, just so everybody knows how much time we have in each deal, the time spent is typically 2 to 3 hours of talking and driving, negotiating, working with the seller, building rapport. Marissa, my wife, has anywhere between an hour to 4 hours of contracts and administration and talking to sellers, talking to buyers. My virtual assistant has 2 to 4 hours per deal of marketing and talking to me for the transaction, and I might have 30 minutes to 4 hours of involvement in a transaction. And when I first got started in this process, I wasn't a vendor mentality. I was, let me get both sides of this transaction. Let me go ahead and do all the work. Let me take all the phone calls. Let me do all the signs. Let me save money and do everything and spread myself too thin so that I can only manage 2 or 3 deals and barely skip along. Well, when I changed my mind, my thinking, and I realized that I could get show way more properties at a given time by partnering and working with others and making it easy for people to buy my properties. I realized I can show 30 properties in a day if I do it that way. And on rainy days, I love it because I will double down on my advertising on rainy days, talk to my virtual assistant. I'm like, get this out there in the marketplace. And rainy days have actually become some of our busiest days where we've had as many as 8 to 10 showings on rainy weekends. So it's because I made it easy to partner with others, made it easier for people to buy our properties. So just wanted to break down some of the time on there for you. Go to the next slide on the case study. And how are we doing on time? I just wanted to get a basic idea. We got plenty of time. Everybody got some time? Good information?
Yes.
Yeah.
All right. All right. So by a show of hands, how many people have done, I think we said wholesale deals, right? Anybody do luxury properties? Smaller handful.
Actually, I have a bad deal with that one.
Well, yeah, so
When you say luxury, are you saying like 500,000 and up? Or
luxury, it's all relative, but yeah, 400,000 or 500,000 and up is more luxury. It's above the median price of household. But again, this is another hotel deal, another expired listing where I show up and I'm actually not good at negotiating. I don't think. I'm actually not patient. I'm what's known as a commander, and even though I'm a friendly guy, I'm just friendly, and I don't believe I'm there to give somebody a lowball offer when I'm negotiating. I actually just ask, what is a fair price to you? And if my fair price is an agreement, then I accept the deal. If their fair price is not an agreement, I'll explain to them why I can offer what I can, and if we agree, we agree. But 3/4 of the deals that I do, I just ask, what's a fair price, and then I accept it. It's because I'm marketing to these motivated niches, and I really am not a good negotiator. I just sign, and they sign. That's how I get most of my deals. And this was no different. I got this property for $540,000. These sellers could not sell for over 5 years. From 2008, I saw the information on the MLS. I was like, apparently y'all have been trying to sell since 2008. How come y'all haven't been able to sell it? And they're like, I don't know. We don't know. And they had gone through something like 3 to 5 agents or 6 agents over that time period. And as we know, the market had taken a big dip, if you keep up with real estate, and had lost about 30 or 40% of the equity or the value on paper after 2008 and the banking crisis that we had. And as a result, they got stuck with the luxury property that they couldn't sell for quite a while until we came in. And I got 3 offers in 3 weeks and took the best offer, all cash, in week 3, funded in 2 weeks after that. So start to finish, 35 days, funded, picked up about $17,250 on this one. And the sellers were ecstatic. They're like, oh my God. I was there, we had some Nicaraguan families come in, we had some other families come in, and then another family, and then by the time we did the transaction, and they realized that my wife is in the business, I'm in the business, my mother-in-law's is the broker, they're like, is this La Cosa Nostra or something? What's going on over here? Got people dropping off suitcases of cash. But we were happy to do this deal. It's a fun deal to do. Drove out to it just a couple of times, and yes, Mara.
Can you tell me, I know I did a deal with you, you guys are really good with the marketing. Can you share a little bit how this buyer came and how you got it? Like, I know you do different type of marketing, can you talk about that a little bit?
Yeah, we do a lot of different kinds of marketing. There's a couple of primary things that we do. My favorite marketing is the marketing that costs the least amount and gets out to most people the fastest. And that's having a good list of agents. And we do a geo-targeted email to 2,000 to 4,000 agents every time we have a property in an area. So if there's a zip code, my virtual assistant will go find all the agents in the zip codes in and around the property that have similar price properties, sold properties that are active in the area, and we send an email within 24 to 48 hours of getting the contract. That alone sells most of my properties in the first week. So geo-targeted emailing for agents. And what's surprising, agents probably buy 20% of my properties. So I'm marketing to my best buyer.
Wow. That's very interesting.
It's really interesting. Especially owner finance, agents are not bankable because they're commission only.
How do you define GOVA, virtual assistant?
So my virtual assistant is from Latin America, South America actually. Excuse me, Mexico.
Okay, bueno.
It's Latin America. Sí, muy bueno. And I don't know if all y'all know, my mother's from Mexico, so I wanted to help give back to some folks in Mexico, and also I wanted to be in the same time zone because I tried working with some folks from India and Pakistan and Philippines, and it's hard to wake up so early and hard for them to wake up at these odd hours. But to finish answering your question, Marilyn, we actually do a lot of bandit signs, and that will be specifically for sell side, selling only. Buying, I don't think bandit signs or signs work, but for sell side, I've got a handful of people that put out signs for us. Originally, I put out all the signs because I had actually been working with signs since I was 14. I hated putting the signs out back then. I still hate putting out the signs now. But I got to be the only person passing out signs in a Range Rover. Now it's a love-hate thing for me. So if many sleepless nights, when you talk about what does it take to do the business and make it and survive, you got to have another gear that kicks in whenever you're trying to do the business. And for me, I knew that I could pass out those signs and get deals. And for us, it carried us through a large part of the start of our process. When I needed to generate a paycheck in 7 days because we were going to make, payroll next month or for the following week, I went and conjured up a deal and made it happen. And now we're doing much, much better. But signs work, Craigslist. We do a ton of. Now we're starting to incorporate Facebook. We're starting to incorporate a lot of YouTube videos.
Vertical
And
response. Vertical response.
vertical response, yeah, you got to have a MailChimp or an emailer that will email in mass. If you have a cash buyers list, you can have we have probably about a 10 to 20,000 cash buyers list, but it's easy to partner with wholesalers and be like, hey, can you let me borrow your cash buyers list for a fee and partner with them? 20% fee or 10% or $500 fee or whatever works. There's plenty of wholesalers that have lists that are 20, 30, 40, 100,000 cash buyers. So if you have a wholesale deal, you shouldn't ever have any trouble selling wholesale deals. Questions?
Can you tell me a little bit more about how you find the agents in the area?
Well, that's stuff that where my VA will find them using MLS.
Oh, okay.
Back to finding VA. Are you gonna share how you found your VA?
Elance. At the time, you can use Elance right now. At the time, now it's called Upworks, but just online recruiting. You just
What's
go interview
Odesk?
and talk to people.
Used to be Odesk.
It used to be Odesk. Now it's Upworks. Yeah. Odesk changed to Upworks, but now there's also Elance.
On your bandit signs, are you specific or do you just do general information? Like, want to buy a house, call now? Or?
It depends on what you're catering to, but you're going to want to just basically put the basic information of the property. House for sale. The more generic you are, the better. I'd probably get too specific in some of my signs, but that's going to be a good way to just generate buyer leads. Yeah. So I do price, square footage, beds, baths, and or down payment.
Yeah.
So this was the other deal that I did from that initial postcard marketing campaign where I spent $1,000 and made $34. The great thing is both sellers, one was downsizing, one was just relocating. I guess both sellers were downsizing. So we got $34,000 in seller proceeds with the opportunity to make another $16,000 from helping them purchase a property because they were both downsizing. So 2 leads turned into $50,000 with virtually no money, just the cost of the $1,000 of the marketing campaign. And again, I'm not good at negotiating. I asked the seller, how much do you want for your property? What's a fair price? And he said, I want $200,000. And he was willing to go to $185. And I was like, well, by the way, the other property that I sold for $575 was tax appraised, I don't know why, at $749,000. So when they said that they were willing to take 400 something, 540,000, I was like, no brainer, yeah, let's sign it up. This property was tax appraised $244, and I'm like, okay, why won't it sell? It was just kind of ugly inside, not perfect, not pristine. But again, I asked the seller, what's a fair price? He said 200. We sold this property for I think 235, and it was a VA buyer, which means that they can actually pay more, and they actually paid more than our asking. We were asking 229, but they paid 235 to build in their closing costs and the cost of doing the loan, so they don't have to come out of pocket. So knowing how to facilitate deals where people can come out of pocket zero is also important in this process. And I do a lot of transactions now where we make money by buying the property, actually, which I'll show you on one of the last case studies, one of my favorite deals. We just bought a house for ourselves. But yeah, sold. Got the buyer in like around day 30, day 40, and closed as soon as we could. Within about day 60, somewhere around there, we were closing. Next slide. Expired listing. This was Lake Conroe. I like selling the lake water. Water sells itself. Sold this property at $475. I think we just got one side, but also an agent bought this property. Next slide. What made this property doable is that this was the property they were selling. And what we did in order to facilitate it is we accepted the contract. We actually helped market this property for them. And we probably, I don't know if I'm the one that actually sold this property for them, but I knew that I had the other property sold and I just needed to get this one done. And plus that just looks nice. So I just wanted to say I played a part in selling this property. Even though we didn't get paid on this property, we got paid on the other one, and we made it easy for the buyers to work with us again. So we do a lot of contingency offers. This happened to be a buyer's agent, or an agent actually buying the property on a deal out there in Lake Conroe. Great thing though was, again, if you recognize how to help people, you will double dip, so to speak, and help them both buy and sell. And I think that's something that a lot of buyers and sellers really overlook. So, next slide. Repeat subject to investment partners. This is my favorite. I say everything's my favorite, right? But the reason I like working with subject to investors or just sellers that are willing to sell with owner financing, again, is because most sellers are willing to pay 3% on a transaction. Well, if they're willing to pay 3% on a transaction and the premium that I can get for owner financing is 5 to 7%, there's an 8% spread instantly right there. And if I can go ahead and get somebody to accept 10% down, and I can go ahead and turn around and ask for 20% down, and that's the standard, by the way, that I see on the market. People are typically asking 10% down, but they're not marketing the way that we do. So we add typically about a 5 to a 10% premium to the fair market of what somebody can sell a property for, and oftentimes even more. And I'll show you guys how some of that works. But why does this work? This was a property that our investment partner saved from pre-foreclosure. They were going to lose it all. They took over the payments. I don't know the details on this particular property again, but the great thing was,
That's mine.
yeah,
That's my bill.
the great thing is we got the full asking, no negotiation on our asking. We only had $35,000 down, and again, we like to work with our partners and make it easy to work with us. But we reduced our commission and fees to just $10,000, even though we were doing both sides of the transaction. And normally a transaction like this would be about $15,000 in commissions. Because it was easy for us to put out the signs, and I say easy, it's not easy, but if you learn how to do it and you get the skill and you get somebody that you can trust, it becomes easier. 25 went to our partner. It was an 8% interest or loan, I believe. And I want to talk a little bit about using a financial calculator and mortgage calculator, because Camille, do you remember what the monthly payments were for you on this? What you take over in the
Well,
interest rate?
so the interest rate's a 2% interest rate.
2% loan.
And it was $1,600 a month. I got it down to $1,400 a month.
She got the payments down to $1,400 a month. Is that taxes, insurance, and everything?
Everything.
Okay, and then how much is it cash flowing now?
We cash flow $800 a month.
She cash flows $800 a month. That is $9,600 a year. That's almost 10 grand. So over 10 years, that's $100,000 in interest payments. What year will this be paid off?
And we did 30 years or we did 25? I think we did 25 years.
Okay.
Yeah.
So So that's 250,000 of interest payments that she's going to be collecting over the next 25 years, in addition to the 25 that we did up front. And we've done 10 of these with her. That's some serious cash flow.
And I didn't do anything to the house. All I did was
Just
clean the
touch-up
carpet.
paint.
We did touch-up paint, clean the carpet, and that was it.
Yep.
Less than a
What
grand.
was awesome about this deal, and this is why Mike and Marissa get things done, is the lady was not moving her stuff out of the house. She was just leaving it in the house. And I was telling her, you gotta get this out, you gotta get this out. So they went and moved everything into the garage.
They
And
did
this lady
not.
told me not to touch her stuff, because she'd be mad at me, right? But when they went and moved it, then I had to say, oh, well, I didn't move it. You know? I didn't move your stuff. So anyway,
Yeah.
but what realtor's gonna go and help you move stuff in the house,
Yeah.
right? And then just to sell the
He's
house.
like, we gotta get it sold,
And
just
you
start
sold
moving
it,
stuff.
wasn't it like 2 weeks?
2 weeks.
By the way, I think every deal we've done with Camille, we've done in less than 30 days.
Yeah.
I think every single one. It's been really a pleasure to work with you, Camille.
Oh,
But,
well, it's great when you get good sellers.
I'm of the mindset of whatever it takes, and to give you an example of whatever it takes, you know, my mother and, you know, I grew up passing out flyers from the time I was 5 years old on people's doors to help my mom clean houses. I've cleaned and scrubbed a ton of toilets, more than I care to mention. But for me to clean and scrub a toilet now, it's just like whatever, man. It's just whatever it takes, whatever it takes. I cleaned that house in about an hour, and on to the next one. And whatever it takes, it also is whenever I pass out signs, crazy hours. I'll go till 2, 3 in the morning when nobody's around, whenever I finally catch up from doing whatever I was doing before, and I'll go put out signs till whatever hour. Because it's whatever it takes whenever you have a limited amount of time and an opportunity. Yes?
I have a question for Camille.
Yeah.
How did you get that?
So it was on the foreclosure list, and we actually put 30,000 in to bring it current. So I have 10,000 still in the deal, but I'm making $900 a month on my $10,000. But or actually, I might have 20. I have 20 into it, but it's still a great return on that 20,000. So then, but yeah, it was a divorce.
That's about 50% cash on cash return, by the way.
Oh yeah.
It's pretty solid. Beats
And
any
it's actually
CD
not
bank,
even
XCD.
my money. My father-in-law, I pay him $200 a month on the 20,000, and then I clear the rest. So the $800 a month cash flow, I clear the minus 200.
Yeah,
So I clear $600 a month with none of my own cash
Yeah.
into that.
So what's the return on a deal where you put nothing into it? It's as Del Walmsley says in Lifestyles, it's an infinite return.
Yeah. So I'm getting an infinite return. And my father-in-law loves it because he can't make 10% on his money anywhere, right?
Yeah, so he's making 10%.
He's
So
making 10%.
there's so many opportunities to pay so many people in the chain and make wealth and create wealth by doing this. So next one. Okay, so this is also a really interesting deal. And had I known more about this, I would have made a whole hell of a lot more money on this deal. But Camille referred us a seller that was very motivated, and I did not know the extent of the motivation because, again, I'm terrible at negotiating, and I'm just like, sign here. I'm like, I'm going to pay you as much as I can. Just know that we're going to pay you as much as I can, because we can.
Yeah. I didn't feel good about taking this one over. I told the seller she needed to make money on this one and
Yeah.
needed to go with them. So,
Yeah. And I didn't, it was a referral, so I just trust Camille, and I'm not trying to take advantage of people. But this person, as it turns out, was going to lose it all in 30 days. They were about to lose it all. And I want to show you how much value and wealth we added to this person. So, in hindsight too, right? You know, and it's funny how she was negotiating to the very end as though she had a leg to stand on. But this ARV was $350,000 for a pristine property where there was a gated community, you know, across the street. Well, across the street, the values were 470s, 450s. So, yeah, much higher value. So this property should not have been 429. But I was saying, you know, I think we can go ahead and make something work because of the proximity, and we just put it up. And I didn't expect to get 429. I wanted to get closer to my estimate of 375. And when I give an estimate, about 50 to 60%, 70% of the time, we actually hit the sales number and our target number. It's not always perfect, but I'm impressed that we got this one because I was testing my I believed that we could. And, you know, you walk out on faith, and when you believe, sometimes it happens and sometimes it doesn't. But I put a lot of emotion and energy into this. And in day 6, a realtor bought it. 75 down, 375. As is, this property should have only sold for 310 on the open market. Because she needed to sell in less than 30 days, if she were to sell at a quick buy it now price, she would have sold for 280. She owed 260. She would have been negative underwater about 10 to 15 grand at closing. So when somebody's about to lose it and they're 10 to 15 grand underwater, and somebody doesn't have a leg to stand on, what do you offer somebody? You offer them something better than losing it all. In those circumstances, you can offer $1,000 to $10,000 down, $20,000 down. I could have even offered $70,000 or $30,000 down. But being the nice, generous guy that we are, and I'm not trying to take advantage of people, we made $11,000 on this transaction. We paid the seller $75 down. Out of that $75, we paid ourselves $11. But I can't complain because I only drove to the property once and I never drove out there again. And I take it back. I showed one buyer, and this took all of about 2.5 hours for me to generate 11 grand. I can't complain. But under other circumstances, if I'm negotiating with the seller, I will offer 10, 20, 30,000 down, and I'll go collect 75 down. And guess what? That 75, that's a 40 to $50,000 payday. Now, in addition to this, I don't think I showed the mortgage calculator on this because I made this woman, or this person, she's actually now also going to be an investment partner moving forward.
She was a single mom.
Single mom, yeah.
And so now she's got a monthly cash flow on this that she was struggling. She needed the money.
She needed the money.
So now she gets to make money on the house. So yeah.
I believe she's making about $1,000 a month. So she's making $12,000 a year. $360,000 of interest payments that she's going to be making on this property over the next 30 years, plus the 75 down that she had, and she owed 280 on the property. She's making over, gosh, that's almost $400,000 on a property where she only had 0 equity. So to understand the scarcity and the opportunity and recognize the deals for what they are, whereas most people would look at this deal and say that's going to foreclosure next week. That's going to foreclosure in less than 30 days. We generated a tremendous amount of wealth and opportunity for this person, and hopefully a disciple that'll come back to us and do more deals.
And I think on that one, sorry, I could have told the lady, no, you don't have time. You got to get out of here. But I said, you know what? You still have time. You need to sell this. So I mean, I could have. My husband and everyone was like, "What are you doing? You're making $1,000 a month on that house." But you know, every now and then you do what's right for the other person. If I felt like there was really no other way that she could have sold that, I would have done it.
Yeah.
But I knew she could sell it, and I knew she could sell with these guys. So sometimes, and I got a lot of flack about it, but sometimes it's better to help the seller than it is to help yourself, right?
It is. It is. I felt great about doing this one, and had I known even more of the circumstances, I don't know I would have accepted the deal that way. But when you sell stuff in 6 days, over 7% over fair market when it should have only sold for 310. It's amazing. So next deal. Okay, this is another one of my favorites. Every deal that I do now gets to be better and better. As you get more experience, it gets easier. I promise. So Philip Warwick, SuccessHomeSellers.com, I bought one of my first wholesale deals from him, and the first deals that I rehabbed were so stressful, but they're 100% finance deals. Long story short, we got in and out of the deals, made out about $25,000 on each of those first transactions that we did. And when I first quit my day job, it was about September, I bought my first 2 properties. So after trying to learn the game for years and years, and just always, through college and stuff, I finally bought my first deal. And when I bought my first one, I said, I'm going to do my second one right now. And so a week later, I went and bought my second deal. And I'm doing 2 rehab projects for the first time. Fortunately, we've got a great contractor that has helped property manage and fix and rehab over 100 of the properties that a family member has in their portfolio. So we had a great contractor. I had confidence seeing his work. And we did those first 2 deals and transactions. And it took 6 months to do those first 2 deals. But my plan was to flip those deals, be in and out of them, make my 50 year. I was planning to make about $75,000 to $100,000 on those first 2. I made half as much, but it was 100% financed. start to finish, using other people's money, credit lines, whatever I had to do. And those first 2 deals, because it took 6 months, I was carrying 3 mortgages. Well, carrying 3 mortgages is okay if you got a day job. But it was 2 weeks into my rehab projects. I said, this is not working for me. It's Friday. I hate this job. I really was hating it and self-loathing. I was like, oh, I got to talk to so many people every day. And I said, that's it. I'm gone. I'm done. It was lunchtime. I was like, I'm not coming back. I'll see you later, boss. And so at that point in time, we needed to clear $10,000 to $17,000 a month, or we were sunk. And so when I'm talking about whatever it takes, whatever it freaking takes, and we're still here, we're successful and swimming, and it gives me goosebumps to think about it again. But so this was 2014, a year ago, probably a little bit more, I guess, a little while after I'd done the transactions with this partner. And I made a video. I knew that I needed to put myself out there, knew that I needed to give good information to people, and I put this video out there, which is now I learned to term as a lead magnet. You put out good juju, good information into the universe like we are today, it comes back tenfold, and I promise it does, and I will show you exactly how and why. Go to the next slide. This is the deal that came from this video. So I had about 50 people watch this video over the course of a year. Just 50. I had a subject to investor call me, and he says, I got a property down in Sienna Plantation. I said, really? Tell me about the property. And he's like, this is a property, it's on a golf course. It's, comps are a little spotty. And I was thinking, after looking at the property, I was like, okay, he's willing to sell it to me for I think it was 605, 610. We ended up working a regular deal with him. Should have made about $50,000 on this transaction and pocketed the extra. But again, I'm not here to take advantage of people. I'm just here to pay people as much as I can. And it comes back to you. And on this transaction, day 40, and it was funny, we had no activity on this deal. Not one phone call, maybe one phone call. Day 40, who calls? An agent. I've got this email about this property here, owner finance. That's a nice one. Can I go see it today? Yeah, go see it. Calls us back about an hour later. Hey, where do we send this contract to in earnest money? How do we get this going? We want to close in a week. That's the great thing about agents. They always want to close fast. So agent bought this, 125 down, was ready to pay the full 8% monthly interest, and they paid the full asking target that I agreed to with the seller of $655, and we made about 20 grand on this deal. I never met the seller. I never met the buyer. I only drove out to the property to make sure my friend Luke over here wasn't trying to play a prank on me and film it or something. But I was amazed when I walked into this house. This is I think it was a 5,000 or 6,000 square foot home. It was just ginormous. And you can't see the numbers too well on here, but the loan amount remaining after $655 and 125 down was $530. So $530 financed, 30 years, 8% interest, came out to $38.88 a month, and they renegotiated 7.5%. Lead source was, again, this lead magnet. So agents made 6%, buyer's agent, again, agent buying it for themselves. They pay themselves 3%, so they're our best buyer because they're saving money, we're saving money, and I'm not having to do that other paperwork. This investor, though, put about, I don't know how much, I forget how much they exactly sunk into the property. I think it was close to about 100 grand. When it was all said and done, out of the 125, they got back 50, but they're cash flowing 2 grand a month. So 24 grand a year, 240,000 every 10 years. What was that? 480 every 20, and then whatever that comes out to be, something $710,000 in interest payments off of a YouTube video that I made a year ago, and 125 down on top of it. So $800,000 on a property that this guy probably only has less than $200,000 of equity. He's making 4 times his money if they stay in the deal. If they don't stay in the deal, he's going to make his money back out of it really quick and be in and out and done with it. But again, I think once I drove out to the property, aside from driving to and from the property, I had 20, 30 minutes in the deal. I made this video a long time ago. It's going to continue to generate leads for me and deals for me. And whenever I talk to this guy, because I generated this video with good information and good content, I didn't have to sell him anything. I didn't have to tell him my process. I didn't have to, I just said, you know, when do you want to sign up? He's like, I just need to talk to my parents, I need to talk to my partners. And it was just no selling. I'm terrible at negotiating. I just tell people how it is and what I do. And next slide. Here's another one of Camille's deals. We call them Camille deals. We like to double them deals. So we'll go to the next one. And she's,
Is that our?
I think so, yeah. She's got pretty properties, and again, she's cash flowing on all these properties. Another partner deal that we did, again, a deal that other people might not recognize, I'd recognize as a giant nugget of gold. This seller owed 117, couldn't sell the property after I don't know how long. Fair market's around 120, 130, so they still could have sold it and been close to zero at closing on the equity. Paid the seller $1,000, took over the payments on 6%. Actually, we were going to take over the payments, but it was a 6% loan already. And I wanted to make this easy to buy. So we were going to still sell it and cash flow it and be in the middle. But this person had such a big down payment, we needed to do a little give and take. So when they had 40,000 down or 36,000 down, whatever they came up with, we sold this property for 153, 156,000, something like that. It was $36,000 of commission. It was several little bit of closing costs, but when it was all said and done, my partners and I split $29,000. How much of that did we take? We only took 3% as a team. So it was only five grand. My other two partners that were partnered on the deal generated the lead, the closer, and then just the facilitator. And they split $22,000. And they spent less time in the deal than we did. They never even drove to the property, they never even met the seller, they signed everything up over the phone, signed it up to us. I thought I had the least amount of time in the deal, only driving to the property once just to see it and stick a sign in the yard. They only had 20 minutes of talking on the phone with the seller. So you gotta have good sales team members, and again, everybody spent so little time on this to generate so much wealth. And it was a good one. It was a great partner deal. On to the next one.
With that, I mean, the ARV on that was like 117, 120, and I mean.
It's about 130.
And you rolled it up to 153.
Yep.
Can you elaborate more on that? I mean,
Yeah, one of the reasons we really like owner financing and subject to is because there's no appraisal, survey's optional, and you've eliminated a lot of your headaches with bank lenders and bank lending. So long as you have the monthly payments are reasonable, 6% note, made it real easy. The payment for an owner finance deal, it's a very good interest rate considering many owner finance transactions average between 7 to 10%. And if you're Scott Wizig, not to discount what you do, Scott, but you charge a lot. It's 12% if you're Scott Wizig if you try to owner finance. And you do different disclosures and usury disclosures, but we made it easy to buy the property, so it made the monthly payment easy. What we find, or what I find, is that when I'm looking at owner finance properties, you're going to find that if you look at the highest rental comparables on the market, you're going to have oftentimes a little bit of price elasticity on the price, because you're going to, so long as you're offering a property on the monthly note to be equal to or less than what the highest monthly rents are in the neighborhood, people are happy to not throw away their money on rent and own and have the pride of ownership. So long as you make a property reasonably priced, comparing them to the monthly local area rents, and when you find properties that are 150,000 or less, you're going to find there's a lot more price elasticity in the premium that you can charge on the owner finance property.
So was the sales point there then that, I mean, they're getting a loan at 6%, and I mean, their payments were going to remain roughly what they would pay for rent?
Right, they were probably paying less than what they were paying for rent in the local market. And the house had granite, it's perfect, pristine, excellent property.
It's basically you give them a mortgage, they don't have to go through the traditional.
Yeah, they can't
They
get
don't have to
financing,
go
they can't get
you're off
For
the-
sure, and well, I mean, I'm aware of like owner finance and stuff, we do that, but I mean, sometimes, you know, when you're above and beyond, I mean, where, I mean, appraisal value, such that, I guess, I mean, if you were really at 130, 153 isn't too far out of whack, but you know, once you start, I mean, really getting up there, you know, I mean, there has to be a hook, you know, for that sales, you know, to sink in with it. And I guess, I mean, it would be the monthly payments along with, 6% interest.
Yeah. And I should probably say and preface that that property could be the higher ARV of about 140, 145.
Okay.
But with properties being soft, just kind of going on the average, and if you go based off of the average person's marketing abilities, that's all they're going to get. I'd probably still sell this retail out, and I've sold plenty of properties above the fair market value, only to have the appraisal come down afterwards because we sell it for so much more than the appraised value. So
I thought it was amazing because I was initially going off the premise of 117, and you were at 153 with it. So I mean that's kind of fat for owner finance. But I mean ultimately, if you are somewhere there 130 to 145, then certainly 153 is in the ballpark.
Yeah. And again, I never met the seller, never met the buyer, did this transaction, less than an hour of involvement. But yeah, it's just, that's why I like partnering. So, next one. Okay, so this is one of my other favorite kinds of deals because a lot of people don't know how to pitch this and how to do this. This is a property that was a landlord tired renting. It just renovated, put all this money into the property, did not want to rent it and have it torn up again. This is a really big opportunity because I've mentioned repeat partnerships, ways to generate repeat streams of business moving forward, whether it be partners, whether it be agents, builders, various ways. But what happens whenever you run across a landlord that has a rental property? Most sellers, or most landlords will, they're just tired. They want to sell it outright. And they're going to sell it for a fair top dollar price. Well, fair market was $145. Seller was willing to pay the 3%, so we bought it $140. So, and then I sold for, I was asking $155. We got a direct buyer. We passed a lot of savings on to the direct buyer and the seller. And we settled at $150. Made a quick 10 grand spread. And again, I actually offered the seller 20 grand down. We collected 30. There's so much spread in there, and it was reasonable. 20% down is 30 grand. And we did right by the seller, did right by the new buyer, and in this scenario, I believe we also did a stream of payments to the seller. So the seller cashed out all of the equity they had in the property. They were ecstatic about that. They're like, great, I got all my equity out. But wait, it gets better. Then the seller went ahead and started to cash flow on the property every month. I think about $300 or $400 a month. I forget the exact number, but what does that work out to be? 300, 400. Who cares, right? $400 a month though, times 10, $4,800, almost $5 grand a year. Times 10 years is $50,000. Go draw that out, 30 years. It's $150,000 of interest payments. That is above and beyond the initial equity that the seller got back out of the property. The 20 grand, she got her equity out. We're paying her an extra. How would you like the extra maintenance-free income that you're going to get off of the interest now, Miss Seller? Sound good? It's going to take me, on average, 3 weeks to get you a buyer, as it has been with Miss Camille, with Miss Camille's deals. And not always the case, but it's great when it works out. And what I like also about this process is that with owner finance, that's where we get the most direct buyers. With other niches, we don't get as many direct buyers because we don't put the direct signs on the different venues or avenues. But again, what happens when you find a landlord with 10 or 20 properties because we all run in these circles? Well, you go ahead and create 20 paychecks that are worth $10K to $15K each, and you're paying a seller their full asking. Why? Because they're willing to often pay at least 3%, but there's a 5% premium. So there's an 8% spread where you can be making 8% commissions on these properties on the regular. And that's the premium of owner finance because they're so scarce. And I just wanted to mention that because when I land one, I can't wait to do the next case study of doing 10 or 20 deals. And actually, Miss Camille could be that case study. We've done that many deals with her. So, and we've been a great partnership. Next. And sometimes I make these sound easy, but I just make it look easy. Great buy and hold. Okay, so this was the painful, stressful times that I experienced with the first deal that we did. I just wanted to show, for those that don't know how to do hard money, You know, we always do the 70% of ARV minus the repairs. We bought this for about 60 grand, sunk about 40 into it, maybe 44 in holding costs. So we only profited 24. But man, I was really hoping to sell this for about 145, 150, and I was hoping to sell it in 2 months. Thank God we bought it low. But so we sunk $40,000 into this deal. Today, if I don't make money when I buy the property, it's not for me. It's just bottom line. If I don't make money when I buy it, and if I have to pay more than $5,000 in repairs, my average repairs whenever I buy a property now is less than $3,000 to $5,000. Sometimes less. So, next one. So yeah, I told my wife that I didn't want to work far away from home. So what did? I buy the house across the street. Yellow sign, high grass, toilet in the lawn. Obviously, as a botched rehab. Got it under contract. We sold it. Next one. And as a matter of fact, we actually. What's funny is I bought the house across the street from me. Literally, I live here. You walk 20 feet across the street. I bought that house and sold it. And I did a double dip on that deal where I not only helped buy the property and got a direct buyer, but the buyer needed a contingency offer and needed to sell their property. We sold their property in a day. So again, learn how to help structure deals and help walk people through the process of seamlessly buying and selling, and always bring up the idea of a contingency offer to help people. Now, this is a property also in our neighborhood that we did. I confused for a different property. Early on, I told my wife that anytime you get a deal from now on, send it my way. Like, don't talk to the sellers. And the difference between being an agent and being a wholesale investor is something like this. Now, this isn't the property that I thought it was, but there's a property on the street called Bell over in the Edo or East End, and seller was wanting a good price, and she said, I don't know what I can get for this property. And this is before the big boom happened, really, 2 years ago. Right around the big boom, I say. And seller was saying, somebody's trying to offer me 60, I don't know. And I was like, so you're saying we could have offered 70. Marissa, being the great agent and helpful person she is, she's like, oh no, they're ripping you off. And it's good, you want to help people, but you also want to be an investor sometimes. And she put that property up on the market, sold day one, cash, $100,000. So difference between being an agent, being a wholesale investor, and knowing how to capitalize and transition could have been an easy 30 grand deal up front. Now, there was another property just like it that was that she did, and same thing. Oh, I got these lowball investors trying to offer me, I don't know, it was like 80, 90,000. That's just way too low. Over off of Patterson, next to I-10 and Rice Military Village. Yeah, I don't know, I don't know the exact numbers, but it was something like this. It was like, they're trying to lowball us, do 70, 80, 90,000. I don't know what it's worth, but they had just a shack in the corner there. And this was before the big old condos went up. They had like one or two around the area. But probably would have been good with the 100,000. Marissa's like, no, we can do it way better. We can do better. Day one, cash sold. Same builder that was trying to lowball them paid $50,000 or $80,000 more than what they were going. Could have easily done a $50,000 commission. Huh? 200,000. 200,000? Oh, excuse me. See, I don't even remember the numbers. I just know it's about a $50,000 opportunity. But again, we help people, and that's our nature, and that's what more than anything what you want to do. But next slide. So those were the first two deals. When my wife had two opportunities that slipped by, that could have been $30,000 to $50,000 in commissions. I was like, okay, let's talk again about sending me the leads. And the next one she sent to me, and I made a quick order. My first Subject 2 deal was less than 30 days after watching Eddie Gant's Subject 2 conference. And that's one of the best things about speed of implementation will often determine your success. Anytime I learn a new strategy, I implement it within 30 days. And I've done that consistently off of all the strategies that I've learned. I probably know about a dozen, but now I just focus on a core 4 or 5. And these are the ones that I guess 7 or 8 I'm showing you. But I'm showing you a few others. This is one of our most recent deals that we've done where, again, I'm a terrible negotiator. I just like to ask people what do they want. This seller said they wanted $100,000 for their property. I said, where's your property at? She's like a Atascocita kind of spring area. I said, okay. what year's your property? She's like, 07 or so. I was like, or 02, I don't even remember. Okay, how big is your house? She said 2,600 foot. I said, can I be there for 2 minutes? When can we do this? Let's get it done. And again, I'm not negotiating. I'm a terrible negotiator. I just ask people, what do they want? What's fair? House is in shambles in terms of boxes and being dirty, and so it's not going to show well. But I took my contractor. I'm like, how much in repairs is this going to take? $3,000. And 1,500 of that is just like getting the details right. So we're getting paint, carpet stretch, steam clean, $3,000 repairs. I'm into this deal for less than 110,000, 112,000 when it's all said and done. And I'm borrowing. I bought it at 100. My loan from my lender is 70% loan to value on a number of 151,000. It was the as-is appraisal. I borrowed 105 at closing, so that's going to mean I'm only going to come out of pocket about $2,000 to $5,000 in closing costs, and then I'm also going to only put out like $3,000 of expenses, which Home Depot is going to pay for all my material costs. So, in terms of my out-of-pocket expense, I'm putting out less than $5,000 to do this deal, and then I'm in turn, because you see the comps here. I don't know if you can see these. But that says 172, that says 160, that says 160, that says 150, 148. Different neighborhoods slightly. 150s, 152, 155 pending in this neighborhood. So knowing that it's just a similar neighborhood, I priced this 164 to sell. And I've already got a line of buyers about 10 people long that have between 30 to 80,000 to put down that are looking for houses in the neighborhood. So if I don't sell this in the first 5 or 10 days, I'll be really shocked. But great deal, and again, I like this process and strategy on using a wrappable loan because I don't have to put granite to get the high-end price. I'm selling it with an owner finance premium. And next one. And that's the property. Corner lot, gorgeous, built in 07. Nothing wrong with it. Just sellers were a little sloppy on the inside. And behind on taxes, I think about $8-10,000 with some miscellaneous judgments and HOA fees and stuff. So, in a position where they were going to possibly lose it all in the future, I didn't know. But again, that's one of my pre-foreclosure lists that I market to. I bet is where the lead came from. So, postcard. Next. All right. So this is our personal residence that we're going to be living in and really enjoying. Stu. All right. So yeah, this is wrapping up here. Just a deal in our neighborhood. Again, you saw the other property that we're selling for $500,000 in the same neighborhood. This one we bought for $335,000. I got a loan for $375,000 so I could take equity out at closing. So we made $40,000 at closing on our purchase of our own home, and it's worth about $500,000. So if we bought it $335,000, put about $20,000 into it, we got about anywhere between $150,000 to $100,000 of equity in the property. So next one.
How you got that one?
It came back to us. It was some property that an agent had for the longest time, and for whatever reason, the banks wouldn't give us the lending that we needed at first. They wanted me to put down way more down, and then it expired, and then I thought the property disappeared, went away for like 90 days, gone. And then finally, I had a random phone call from a partner. It's good to keep a good rapport with your partners. And I just so happened to be going back over there to talk to the seller again because I saw their signs were all out. They're no longer in the yard. And as it turned out, my partner said, yeah, I think he's interested in selling again. And da-da-da, he mentioned your name. And I was over there 5 minutes later and got a contract. I said, this is how we're going to do it. This is what I can do. He said, okay. Terrible at negotiating. Just like, this is how it is. Next. And then, so we just keep going. So again, the idea is, thank you so much for joining. I hope that you took a lot of value out of this presentation, and I hope that you recognize now how to do a variety of transactions, whether they be owner finance, luxury retail expired listings, and such, wholesale deals and owner finance deals. So if you feel that there's a synergy between us for you to be able to have an opportunity, whether you're an agent or a wholesale partner, please don't hesitate to give us a call. We've got information. I'll be providing the slides and the content again later on. And if you guys want to set appointments with me later on in the week, by all means, I'll be doing appointments. So, thank you so much for joining us today. Any additional questions? I know it's 2 and we're running short on
Yes,
time.
I did.
Yeah.
Back to the owner financing. Now, is it a problem when, with the seller, with you keeping their mortgage in their name while you're, doing owner financing?
Again, it depends on motivation and why they're, and the scenario. So that last deal I showed you, that was a private loan. So I bought it with a private lender, and it's a wrappable loan. And so in that scenario, it's not an issue at all because I'm actually now the seller and the owner of the property. And in some scenarios, some sellers don't want that, so you don't do owner finance or don't bring it up. And in some situations, sellers may want a larger down payment than what's the standard, but maybe because they want to put a large down payment on a house or buy a boat or something, and it may still work. So sometimes instead of doing the 20% down, I'll tell sellers like, well, we'll do 30% down. You just got to give and take and understand the situation. And with a landlord or a seller that doesn't care about their rental property, they're more open to keeping it in their name because they're going to continue the purpose of the investment, which was to make more money. And owner financing always helps them make more money. But for the sellers that are so motivated that are going to lose it all,
Right.
when you're paying them $1,000 or $5,000 or $10,000, they're just like, thank you, Lord.
Wow.
That's usually how it is. You're finding these people that are like so motivated that you're just saving them and they don't care.
With those people, do you talk about when it will come out of their name, or do you try to just let it go in like indefinitely, or do you ever promise them within 2, 3, 4 years? Or if they ask you, what's your take on that?
Well, you know, there's a friend of mine that talks about how to analyze a seller's needs and motivations, and there's something called the superhero close, where you go through the different scenarios of, well, here's your options. You know, if you sell it outright, you're going to be around this price. If you sell it in your circumstances, you're probably going to be underwater if you have little or no equity. So you can short sell, you can foreclose, you can take that nuclear hit to your credit, or we can pay you a little bit of money and save your credit, catch the arrears up, and we create a win-win situation for everybody. So you talk about sometimes what the scenarios are, and then you can then determine, once you understand their motivations and their needs, then you can determine, okay, it may be appropriate to do a 5-year balloon because it's going to open up the buyer's market to more buyers. Or it may be appropriate to do a 10-year balloon because this person's of older age and they're 80 and they don't want to collect a stream of cash flow that goes beyond 10 years. So it just depends on the motivations and the scenarios that you uncover from a seller. Any other questions?
Yes, could you please go back one slide and just kind of like recap, break it down exactly how we can partner and...
Yeah, there's actually a couple of, what do you call it, broker fee structures and wholesale partner fee structures. But in actuality, every deal is so unique when you're a subject to and a wholesale investor. Every deal is so unique, and really things are case by case. We have a general parameters and fee structure that helps people better understand, but because everything is so case by case, it would confuse you to tell you all the other kinds of deals. But to break it down, we do a flat $300 transaction fee plus errors and omissions on our transactions with our agents.
Okay.
And with people that are not agents and wholesale investors, we'll typically still do a 3%. And if 3% is all we're doing on a luxury home that's, for example, $400,000, 3% is $12,000. Oftentimes people don't know how to get those luxury listings, or if you're talking about $1 million luxury listing that falls in your lap, that's a $30,000 commission. We split those 50-50, so they can be a range of fee structures, but the idea is we want to try to always be fair to you. Now, in those instances where a partner brings us a deal, you think you have something, but it's too thin, you know, we're flexible. We'll work with you and change our fee structure in order to accommodate you and help you sell the property. So.
And for example, 50-50 partner that structure. So what do you expect from me as a partner? Like bringing a deal, lead, equity, like what?
Yeah. So that's where I was talking about on a deal where if you have a luxury listing and it's a $400,000 property, it's a $12,000 commission. It's and it only took you an hour or 2 hours to get the deal, and it's going to take me an hour or 2 hours to sell it. We're each making 50-50. an example where you brought the lead and got the deal. Now, I've got acquisitions partners like my partner Tim that runs all my leads moving forward. He's the man. He's awesome guy and really good at working with people. I pay a 35% payout because I'm providing the leads, I'm spending the cost on the marketing, I'm also spending the cost on getting the signage and the marketing out, and Tim will show the properties that we're principals in or owners of and get those properties sold. Now, in addition to that, Tim also buys properties, and when he gets his own leads through his own lead sources, he brings the properties to us and we partner 50-50. Now, if Tim gets a deal, like I showed you on that one property that was owner finance where it was a $36,000 commission, Tim brings me the lead and he actually hires us and lists the property for 3% with us. So if we're making $36,000 commission, we're only making 5 or 6. So I'm trying to be as equitable and fair. So not every lead will be 50-50 when you partner with us. A lot of deals, if you're more sophisticated and more advanced, you'll be able to make $30,000, $40,000, $50,000 spreads and commissions on some of your deals. So in those deals, we're going to be fair with you and do 3% because we may make a 20 or 30% commission. I'm not splitting 50-50. Only if it's my lead source, only if it's from my lead generation. And in which case, I'm not paying 50-50 if you're helping sell the property. I'm doing 35% for you to go run the meeting and do everything that you're doing. So,
How many owner finance buyers in your database today?
you know, it's an irrelevant thing, but we got maybe about 2,000 to 3,000. But it's an irrelevant thing because whenever I get a new property, it's only the owner finance buyers in that immediate market that count. And whenever we do a new property and do new marketing, it's not uncommon for us to sell a property in the first week. And we even get 3 to 5 buyers sometimes on some properties. And I've got a property right now. We have had 4 offers on the property, and it's fallen out of contract 4 times because of small leaks, small roof damage, where people are like, oh no. But we always have lots of buyers, especially on the finance.
Yeah. So that question you asked how many people, I'd say probably in the last 14 days due to the amount of signs that we put out and so many, we had at least one person there with $50,000 down. And they're like, hey, what do you have? And I target an area, I bring up the MLS form, there's just not a house available for them. So things like Barry Scholes that we're partnering with Camille on right now, I've got probably 5 people with $50,000 that want to go see the house. So I'm taking like 3 people there this weekend. And I'm targeting other houses in that area just because I know I need to get more than inventory to sell.
Yeah. I find that I take about 10 or really about 20 phone calls, 15 to 20 phone calls. I'll get 1 qualified buyer. I might get a few more than that. I might get 1 out of 10. I might get a qualified buyer. But my niche is going to be a little bit higher end homes, not $100,000, not $80,000 homes. My niche is $150,000 homes where I can offer 10% to 15% down to the seller, and where I know I'm going to make at least 5 to 8 or 10% on the spread. I like that niche because buyers tend to have 30 to 40,000 down, but when you get above that number and you get above 180,000 to those higher end homes, the monthly payment becomes unsustainable for so many of the general population. So you want to find properties, I think, that are less than 180,000 to be able to help people afford the monthly payments and the down payments, and you're going to find a lot of abundance in that niche, a lot of demand. So any other questions that y'all want to take? Let's set up an appointment. Y'all can come to my humble office and abode that I transferred my storage shed into my office, and we're moving up in the world from the living room couch to the new office now. So thank you so much, guys.
Thank you, Mike.
Cheers. Yes.
I just want to say thank you, very great. It was a pleasure meeting you.
Yeah,
It was really good.
Yeah, thank you. I'm glad you guys got to enjoy it. Nice to meet you. Yeah. Stay in touch. Stay in touch.
This guy was